Good morning. Happy Friday, everyone. Hello, hello, hello. It is Friday. Yep. Hey, Petro, Carrie, how are you? Robert, James, Arturo. Who else do we have with us? Anyone on YouTube? Yeah, no, not yet, but we just opened it. So try not to open it early. Yeah. Because otherwise you come to the YouTube channel and it's just a black screen. So, hey, Tom. Tom in Texas. That works out pretty good. Management services. Happy Friday. Vivek, Gary's here. Brandon, BB, how are you? Morning share. All the way from Amsterdam. And on YouTube. So from Amsterdam, is that Johan? I'm guessing. You said yeah, but hopefully I got your name right. That seemed a little quick. Morning, Mervis from Alabama. Oh wow. Perfect.
Good morning, everybody.
Like the composer.
That's right. Happy Friday, everyone. Hope everyone's doing well. Hope
Ugh.
everybody is doing well. We'll give the room another few minutes to fill up. Just want to kind of show you what's happening right now. Hey, Randy. Good morning. Happy Friday to you. Let me share my screen here. There we go. So you could see, and I wrote to you guys this morning. This is the market. Matt, you can see my SPY, right?
We can see your spy.
Okay. And I wrote to you guys this morning that I'm not feeling this market very much. I think the market is good morning. Good morning, Frank. Uh, I said that the market looks a little vulnerable here, and we're this is the first red bar that we've had today, but it is past the VWAP. This orange line is the VWAP, and it is. So I'm not notice I wasn't feeling any trades. I'm kind of neutral. I think the market's a little overbought. I still think strong stocks are going to go up, and we're not going anywhere. But usually, after we see a day like this, yesterday, we don't see too much follow through. We see a down day and then it comes back up and it goes like this. So I would be expecting the market to cool off in the next couple of days. This is getting a little too much. This is just getting a little too much, folks. Yeah, I mean, look at the VWAP. This is. Notice how small these bars are, and notice how big this bar is. It's just as big or bigger than the bars taking us up. If we come down right here to this level, then we're going to go negative for the day. Adam says, "Hate twiddling my thumbs, not taking a loss just to keep busy, so we wait." Yeah, yeah. Don't. TSM went in yesterday, 25% up. Alice only one contract though. Well, it's Vivek, it's better than a sharp stick in the eye, as I always say. But Jonathan says not feeling the long side at these levels too. Yeah, just being extra cautious. I gave folks some stuff in my VIP room overnight, and actually both of those stocks. As a bonus, I gave some of those stocks. I also gave a short. I gave it to you guys here too yesterday. CYTK. I really do like that stock to the downside, and I think it's going to come back down. Well, Robert, here's the VWAP right here. We're looking at it live right now. And this is the SPY. I'm looking at the SPY. I have the E-mini on my left side too, but I'm looking at the SPY for the stocks. There's really no reason to look at the futures. They're a little too fast acting. But you could see this is not positive. This is not positive. Um, so it hasn't really been a slow week for the pit, but it hasn't been a fast week. But we've been doing more swing trades this week, and they've been working out fine. We haven't had any issues with it. So I would say right now, BB says good, slightly up near 100-day moving average. Yeah, yeah, I'm very good. Adam made some money on Okta. Good. That's one of the stocks I gave you guys overnight. Be careful right now. Be extra careful. It's Friday. The employment report was positive. We don't really have a major catalyst. A lot of the FANG stocks are cooling off. The SPY isn't necessarily holding up all great. And we've had plenty of winners this week. And I told you, did I tell you that Coinbase looked good for a swing trade, or did I not? Do you guys remember anyone saying that Coinbase still looked good for a swing trade? Dornell, I like Palantir. I did. I did. But that's in history already, Palantir. I did. I did. I'm not sure. I haven't looked at it since yesterday. But, one of the things remember something, folks. And here's where we get a lot of confusion. And I get it. I get it. It's not, I mean, look, I know that people, and me and Matt, we make fun of it all the time. Well, this is still good over the weekend. No, Roma, I wouldn't be buying Coinbase right now. I wouldn't be buying Coinbase. I'm saying that if you bought it when I told you to buy it, it's a good thing. So I want to explain something to you guys. In the perfect world, in the perfect world, hey, Ken and Cyrus and Petro, how are you guys doing? In the perfect world, all stocks that I would give you would be priced between $25 and $30. They would all have as much liquidity as Citibank. The options would all have 1/16th of a tick spread, or now it's not even 1/16th. They would all have a quarter of a penny spread, and implied volatility would be at historic lows, and they would all be swing trades for 3 days.
And dollar strikes. You didn't get there.
Mazel tov and dollar strikes. Yes,
Yeah.
that would be the perfect world. But unfortunately, we don't live in the perfect world. Some stocks will be $300. Some of those options will be very illiquid. Hey, Cliff, some of the times the implied volatility will be so high that you'll barely make any money when you buy an option. I understand all that. The problem is I can't do anything about that. It's hard enough. And by the way, it's not like I've had any complaints. I've had more like questions, not complaints. But people, I understand the frustration. I tell people to get into a stock. The stock goes up 2%. I tell people to get out of a stock, and I get an email saying, well, I got into the stock a little later. Do you still want to hold it? It's very hard for me to navigate with, remember what I always tell you, the more restrictions that you will put on me, the harder it is going to be for me to navigate, because I'm going to be filtering myself. The more you will just leave me alone and let me do my thing, the better it'll be for the majority in the long run. Okay. Therefore, if you guys didn't make 40% on a spread where we made 25, or we made 20, or there was a bigger spread, or you only made 10%, or you broke even and the underlying made 2%, that's called the tough shit rule. Okay. Excuse my French. That's called the tough shit rule. I'm sorry for using foul language, but that's what it's called. I can't please everybody. I can't make everybody happy. Do you know how hard it is to pick stocks, just the underlying for the stock, 90 out of 125 or 130 trades, to have a 95% win rate? It's hard enough for me to do that. I can't do all the other stuff. Okay. So the point in me saying this, and again, people have been really good about it, but a lot of times we'll get confusion. I'll get out of a stock and people will be like, well, are you still holding it? It's a swing. Folks, you're on your own. You're on your own. When I say you're on your own, I mean you're on your own. If I give you gravy on that, sometimes that's just an extra bonus. I can't make everything perfect. It's impossible. My job My job is to give you a 95% win rate on stocks in the pit and here, really good win rate. But I can't micromanage all of this stuff. Now, if I say get into a stock and I say get out of a stock, I'm watching that like a hawk. Everything else is gravy. Yeah, I would think so too, but we still get, like I get the confusion because I'll say it's like last night. I got an email from somebody, very nice lady. Um, I want your personal experience. What do you think of these three stocks? Well, she mentioned three stocks that I said you're on your own, and we got out of those stocks. So what am I supposed to do? So it's very hard because then I have to go back, I have to go forward, I have to look at the. It's too difficult. It's too difficult to do that. Give as much help as you can. Nobody. I haven't had one complaint. But my point is, give me a break sometimes. I can't like I can't. You know, there's only so much I could do. There's only so much I could do. So please understand. It's not always going to be the perfect world. We're not always going to be in a blue ocean with no waves, with an 80-degree weather, with no humidity. Come on, the markets don't work that way. Give me a little break. Right, right. So, and again, folks have been nice, but like I'll get an email saying, "You said you made money on coin. I lost money on coin." And I say, "Well, we got out as a day trade, but I also said it's a good swing trade." 2 days later, that coin will go up 20 points, and that person's telling me, "Oh, thank you. I just wasn't paid." But you see what I mean? It happens all the time. So, I'm very relaxed. I'm very relaxed here. Richard says, I would like to say thank you for all that you do to help us when you do this for free. Yeah, and I give the bonuses for free too. So please understand. Take a step back. Understand. I'm not perfect. I don't know what option you're buying. I don't know if you're buying the option at that time. I'm probably not even looking at the option because I'm so damn focused on the stock. Please understand. We are dealing with world limitations that I cannot control. Like the other day, like I'll see this. I'll give three stocks as bonuses. I'll get 15, 20 emails complaining, and then 2 days later, those stocks are all making 52-week highs. And then I'll still get an email saying, I didn't get up. I made only 7%, and you said you made 14%. Yeah, but I got out 2 days ago in real time watching the market. You didn't. So please, folks, give me a break. Give me a break. And again, I haven't received one bad email. We've had a refund rate which is an exemplary, I think less than 5%. The typical refund rate for financial products is much higher. We've had it's been fantastic, but please give me a break. I'm human and I can't make everything perfect with a 95% win rate. Just take that into account. Work with me, please. Too old, too slow. You're still great in my book, even if I'm too cheap to jump in. That's okay. That's all right. So again, and folks have been really nice and understanding, but please understand, I can't predict the future. I, I can't, I don't know if the swing trade will be better yeah, we're covering debit spreads right now. So a little bit about the market, and then I'll talk about debit spreads. Uh, no, no refunds. But I am just, again, I'm just saying, please understand the limitations that I am under. I can't, uh, I'm not Moses. You know what I'm saying? All right, let's just go here. Okay. No. Better to have a win instead of a loss, even if it's not the most percentage. That's what I think so too. I did. I went there. Yes, Anastasia says I encourage you to read Trading in the Zone. Yes. Read that. Read that book. Read that book. Okay, so let's talk a little bit about the stock market. As you guys could see right here, on a daily, we're looking amazing. Although I don't like the fact that we're like on the low of day, and if we break really deep into this, I will say this could be a first sign of weakness in the broad market. We're also outside of this channel that I keep drawing for you every day. So be really careful around here, folks. I'd rather you miss out a couple of opportunities, but get hosed. Okay. And the day is still young and we can go back up here. But right now we're below the VWAP. And right now the QQQs are only up 7 points, which isn't a lot. However, the Dow has rallied in the last several minutes. Let me just take this here. So if you look at the Dow, we're actually moved a little higher. But if you look at the QQQs, we're moving lower. And as you all know, the QQQs is what's been running this market. Um, Notice where we are in the QQQ. And this is what I always say. This is um, you notice where we're at right now. Anastasia says, I've worked with several hedge fund managers. Roger is the best, and it's beyond obvious to me. I have nothing to pray. Oh, thank you. That's very nice of you. Matt, please get that to Dave, would you? Oh, thank you, just old Bob. Good. I appreciate that. But please, please, don't get so literal on everything we do. Just, use a little common sense. That's all I ask. Please, for everybody's sake. And it'll help you out. It'll help you out as well in this business. Okay. Look at technology. Look at technology right here. It looks like it's weakening. Now we can erase all this and go back higher, but it's Friday and we don't have a major catalyst. Now I will say this. I had dinner with T-Buzz. We go out every other Thursday night. And he was telling me that he had Chuck actually. Matt, you know who Chuck is. He helps us out sometimes. He was the first guy that T-Buzz ever hired. And Chuck did a study for him. This is what T-Bus told me. I don't know the details, but the last 3 or 4 times we had an employment report, he said that the market actually went down and then went up. Well, today the market was actually pretty bearish and went up, and now it's coming down on the QQQ. So, and if we look at let me look at the sectors real quick here. And if we look at the drill down, where's my drill down? Where's my drill down? Oh, here's my drill down. If you look at my drill down, you will see we do have some weakness, but for the most part, we're strong. But look at technology. It's only up 0.15. Hey, that's nice, Deb. I like PDD. Get that one too, Matt. I really like that PDD trade a lot. Okay, so I feel the market is vulnerable. I feel that bonds are. I also mentioned this earlier today, and I'm going to mention it again. I think bonds are vulnerable. I think we're going to go back into this base, and I think we're going to get chopped up around here, and I think we're going to come out of it in the other end of this. If we enter this channel, the odds are we'll come to the end or the other side of that channel. Matt, does that sound familiar? Did you read or watch a video about that recently?
Yep.
If you enter a channel, you're more likely go to the opposite side of the channel. If you break a channel, you're more likely go out.
Yep.
We've been doing some training on market profile, and there's some 10 rules that we're going to be giving you guys, but that's one of them. That if you go into a channel, the odds are you'll stay in the channel and get chopped out. Yes, and that's a descending triangle as well. That's Ken. I actually mentioned it a few days ago when I was in the morning sessions when I talked about it. There's a weekly, it's a descending triangle. So, and also the reason interest rates have been going down. Notice I'm pointing up, but I keep saying down because this is not interest rates. This is bonds. Bonds have been going higher. Interest rates are going lower. Is because the Fed keeps saying this year, this year, this year, but the Fed keeps kind of impliedly pushing forward their agenda, and that's making me very nervous. In case you didn't see when I posted beginning close, wow, look at that, Deb. That's great. Go ahead and repost that, Matt. Give it for Dave too. Yeah, higher for longer. You're still getting the bike this year. You know, I always say you're still getting the bike this year. Well, you're still getting the bike this year, but it may not. It may happen in October. That's what realistically, I'm thinking September through December. I'm thinking fourth quarter, which would make perfect sense too, by the way. But that's what I'm thinking. Hey Matt, take a look at those lottos for Apple. Take a look, would you? Just give it a look. I know Matt likes those lotto trades. And Matt, before we're done today, would you show them the last one you took and failed to give everybody and made 300% return on?
Oh, yesterday?
Yeah, show people what you've been doing, what you've been scheming. He's trying to perfect his methodology for the lottery trades. I want him to show off a little bit. Okay, so I'm going to talk a little bit about debit spreads. I'm going to talk about debit spreads in the context of the picks that I'm going to give you today. Okay? So, in other words, you'll get to see how we would pick debit spreads, regular options, so you can learn by doing. Okay? Does that sound fair? A debit spread is simply buying an option and then selling a further out one to cover the cost, partially cover the cost of the one that you sold. Your profit potential is the difference between the two. Okay, so you can't make more. We don't look at it like that. I look at it as how much it can double. So I'm going to show you how to do debit spreads right now as we go through our analysis. I hope that's satisfactory enough for you. That way I can kill two birds with one stone. I really do not like what I'm seeing with the QQQ right here. I don't like this at all. And I told you this morning, be careful. Notice I didn't put any day trades on in the trading pit this morning. And by the way, what did I tell you this morning? I said I want to be extra patient today and let the market here, let me, you know what? Why don't I just read it to you? Here's what you guys, if you got into the pit this morning at 9:27. Typical pattern last few weeks have been strong end of week rallies, consolidation. Not sure if that will happen, but I want to be mindful of how much we've gained last few sessions. Want to be extra patient today and let the market really show me what it wants to do. Diverging Dow weaker, tech slightly stronger. Let's see how the market flows and if we can have follow through from yesterday. Don't be FOMO Joe this morning and start jumping in. Now, how much money would that have saved you? Because if you would have jumped in, you would have been right where we started right now. I don't know how long it'll be, probably about 30 minutes. So, yeah, all the sessions are recorded and they're live on YouTube where you can actually go right now and watch it and rewind it as you're watching it in real time via Roma. All right. So, I'm going to start with the short side and then I'll do the long side. This is debit spreads. No, this is debit spreads, not credit spreads. Debit spreads, the opposite of credit spreads. Okay. So first stock, I'll do the short side first because I'm more bearish than bullish, actually. Yeah, I should have taken this trade. I told Matt I really wanted to take it right here at 112. Actually, didn't I send an alert saying it looks really good? Oh, yeah, I did at 10:59. Right here. Let's see, 10:59. Let's see what happened. Let's paper trade this baby. 10:59. Right here. Damn, I should have taken the trade. We would have had 60 cents. Well, I missed it. But anyways, I still think there's more downside. I think it's going to go to the 200-day moving average. So how would we pick options for this? Well, let's say we were looking at puts. And let's say we wanted to sell this stock, which I like the stock. And I would put a stop somewhere right here at about the 122 level. We would have 14 days till expiration. And typically, we would go all the way to 1, but oh, no, we wouldn't. There's something wacky with the options. Let's go 20 days till expiration, and we would pick this option right here. This is March 28th expiration, PDD ticker symbol, and we would go to 72. We can maybe even do the 69. So that would be the option we would buy. So the question now comes, well, how can you mitigate the cost of that? So let's just say we bought this one right here. Okay. This one hasn't traded yet today. So let's say we bought this one right here. And let's say we bought this for $1.11. And let's say we sold the 115 for $10. Our debit would be $1.11, right? Here, 10, 11, 15. What's 11.15 minus 10? It's $1.11. What's our profit potential here? The difference between this and this is $2. So we pay $1.11, and our profit potential, if it goes to 114, is $2. So why do I like this spread? Because it gives me a potential to make twice, almost, it doesn't have to be exact. It gives me the potential to make almost twice as much as I would lose on the trade. And if you constantly keep making debit spreads with a 2-to-1 ratio, give or take, doesn't have to be exact. In this case, it's 89%, okay, whatever. But if you keep taking trades like that, you will come out ahead. And what I always look at with a debit spread is something to give me a 2-to-1 ratio, okay, a 2-to-1 ratio. Now, when I'm doing a debit spread, sometimes I'll go with a delta of lower than 70 because I'm not really looking for that option to increase so much. I'm looking to get a differentiation on the spread. So again, but usually I prefer to go 0.70. So that's the first one. Let's do another one. One second, my wife, God bless her. Okay. So next one. Yeah, let me move the option chain. Thank you for that, Michael. How are you doing, Michael? Hope you're doing well. And here's a picture of that spot. I showed you the QQ here. Here's the QQQ. See how it's coming in? And look at the SPY. Also bouncing off of that. I'm not loving this right now. Good, good. Do you utilize expected? No, I don't use expected moves. Yes and no if they're based on something. If they're not based on something, absolutely not. But they have to be realistically based on something. I prefer looking at a target instead of the and Roger, we'll get into this more as we get into more futures and VWAP and all that. But I think what you need as a trader is you need a way to be able to have a true target, because it's one thing to say my risk is I'm going to risk $2 and my gain profit potential is going to be 15. Well, where are you getting that risk to reward from? From your head. It's not coming from anywhere. But if you have a real target, if you have a true value of something, you can create a risk to reward profile that will actually make sense on what I just said. That's more important than expected moves. So Roger, yes, on expected moves if they're based on true value of where we're going, which you guys haven't, I haven't taught that to you guys yet, okay? So wait till I teach that to you. But I don't like the SPY here. I think we're going to bounce back. Do I think this is a peak? No, no, no. Uh, but I wouldn't be surprised if we saw a few down days. Remember, usually we have after the report, it's soft and then it's firm. Today we had it firm and then it's coming out soft, and we're not seeing any bulls coming in to defend this. Bears are fully in control. Look at this. Not one red, not one green thing. Anyway, let's continue. So next stock, SJM. Told you yesterday and a couple of days ago I'm bearish on the stock. Well, I'm still bearish on the stock. I would put a stop loss. So the answer is yes when you really have a true value, a true idea of balance and value, Roger. Otherwise, it's just you're just creating something out of your head for nothing. Stop loss 123, high 123s. We would be looking at we're looking at puts here again. I don't know why the calls keep popping up. So we can't really go 7 days out. There's not much there. Not much here anywhere, one or the other. But let's just try. So right here, we'll go 42 days out. Here's a put, 77 delta. So how much am I selling this option for? $7. What am I selling this for? $5. It's $2 spread. What's my profit potential? $5. See that? That's what I want to see. I want to see the debit versus my profit potential. And I want to see the profit potential be roughly, doesn't have to be exactly, roughly, sometimes 250%, sometimes 85%, but I want it to be around 100%. In this case, it's around 120%. And in the last one, it was about 83 or 85%. Let's continue. Starbucks. Are you guys understanding this? Is this complicated, or is this something you guys can get a hold of? So Starbucks. Oh, one more thing. If you guys are in my trading pit program, I know that a lot of people do this. What they do when they get a fill on a debit spread, they just automatically set their price 10% higher for the day. and just let it go. It's not, I'm going to keep going. I'm not done yet. I'm going to give you another 20 examples, Leonard. Um, no, they're not both in the money. No, no. And I'm not even looking if they're in the money or not. I'm just starting with a delta of 70 and then I'm going to the strike price that'll give me two times risk to reward. And I'm going to go over several times and show you how it's done. Okay. You just pull up the spider while we're talking. Ah, we're now at the low of, we're now at yesterday's VWAP. I'm not liking this at all. This is a reverse. This is a reversal, folks. This is now an island. Look, this is a Gilligan, not a Gilligan's Island because there's no gap, but it's a lizard. Wouldn't be surprised if we go down to the bottom of the channel. Yep. Hey, what did I tell you this morning? Be careful. Don't jump in. Here, let me even post something. Yeah, look what I just wrote in the Telegram channel. Yeah, so okay, so I talked about Starbucks. Let's go to the next one. VRSN, cybersecurity stock. Not a not. I'm just saying the SPY today did a 180 reversal, complete 180 reversal on a Friday after jobs report. So VeriSign, uh, and it's not a good sign when Costco comes out with bad earnings. I warned you about that in my morning session, and I told you guys to be careful. And I gave you a bunch of stocks today to the short side too. Thanks, Matt. Right here, 197-ish area. Oh, we'll go here. We have plenty of time till expiration. Right here, 77 delta is right here. Last was 680. We'll just go by these prices, okay? 680 was last. And the one before that was 650. A dollar. What do you get here? Five. Probably from yesterday, if I had to guess. Let's just do these, okay? It'll be easier to do these because these actually traded today. 650 and 416. What's the spread? It's what, about $2.34, something like that? Well, that's roughly half of that. There's your spread. Notice I didn't choose to go into 0.77 because I just don't know what the spread price is right now. But again, let me see something here. And it's not looking good either. So now let me do the last one, KDP. Okay, here's KDP. Think it's going to go down. Oh yeah, this market's cooling off. Cooling off. Uh, about 29.50 would be your stop loss. It's okay. It's no Peter, it's still valid. We would be looking 42 days out to April 19th, KDP. We would look right here. How about this? Look, 31 and 29. How much is in here? $2, right? What's the spread here? 220 $2.25, 77 cents. You're paying about what? About $1.50, $1.40, and your upside is $2 right here. Yeah, it is a good thing. I want the market to cool off. I really want the market. What I would be doing right now is if I wasn't here, I'd be looking for the strongest stocks that are still strong, but I can't do that because I'm here right now. But you know what we can do? We can look together at the strongest 5-minute stocks. You guys want me to tell you what the strongest stocks in the last 5 minutes were? Actually, the last 30 minutes held with the 5 minutes. M here. Here. You would want to be looking at these stocks right here over the last 30 minutes. Right here. Let me look at MAA real quick. Now look at this stock, MAA. It's the strongest stock. It's got the 200-day moving average here. So it only has a couple of points in it, so I wouldn't do it. Let's look at EXR. Ooh, above the 50-day. I like this. This looks good. This looks really good right now. If I was a buyer, I'd probably buy this stock or let's look at Google. Nope, right at the moving average. No way. TLX. Yes, 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 yes. So if I was to buy stocks right now, if I was to go long right now, I'm going to give you guys this stock as a bonus right now, just as a bonus, okay? And we'll do a debit spread. How about that? We'll remember, we got to go to the call side. Let's go 20 days out. Let's go to delta of, see, like for example, I wouldn't do this one here. It's got a 250 spread, but you got like a $3 spread, a $2 spread here. So that's no good. But this looks good right here. Uh, this looks good. Here you have a $1.50 spread, and here you have $2.50 spread. So what I would do is I would buy the 294, I would buy the 155, excuse me. I would buy the 155 and I would sell the 157.50 in this case. No, I want to do calls. No, no, I said right now with the market going down, I want to see what the strongest stock is. Strongest stock is. So right now, this is the fifth strongest stock on the stock market. If the stock market rallies, this should rally too. So anyways, just throwing it out there. All right. So I gave you the short side. Let me now do the long side. And I won't be, let me do KDP. Yeah, it should be coming down. All right. Long side. Uber. Still like Uber. Matt, you may want to start looking at some good longs right now because the market is still bullish and we may come back up right now.
think that's a very high possibility.
What?
I think it's a very high
Yeah,
possibility.
it's a very high
You hit
possibility.
that second deviation band and just stop.
Yes, yes, exactly, exactly. We're thinking the same thing. Uber, stop loss right here, 76.60. 14 days to go. We would be buying the, this thing is killing me. All right, 22 days to go, excuse me. And we'd be March 28th, Uber, UBER. We're buying the 75 calls. And we would be selling the, I would just buy, I wouldn't do it as a spread. I would just buy the 75 calls. It's not a good risk to reward. Not a good risk to reward. Next one, NTX. Nope. NXT maybe? Yeah, NXT, sorry, NXT. Stop loss right here, 54.70. And 42 days till expiration, April 19th. There's just nothing closer. We will go right here to the 55 strike. We would not do a spread. We would just buy this option. DoorDash. Now, I wouldn't be buying these right now, folks. I would be buying stocks that are holding up really, really well. These are swing trades. These are not day trades. About 127, 128. 14 days out. Right here, we'll do the 68 delta. That's fine. 127 strike price. If you want, you could do the 126 strike price. And nope, I wouldn't spread this either. GEHC. I like this a lot right now. A lot, a lot. I like this stock a lot. I would put it, look how it's holding on. I would put a stop at 90. I'd be buying the 14 days out, delta of 78, 91 call. I wouldn't be spreading this either. See, the puts looked good for spreads. The calls don't right now. CBRE. Again, be careful with these stocks. Good, Cyrus. Stop would go right below this level at about 90.38. We would go 42 days out. We would go to the 77 delta, 87.50 strike price. I really liked this stock this morning. Let's see how it's doing right now. This will be the last one I'm going to give you today. 116 stop loss, 42 days till expiration, April 19th, delta of 76, 115 strike. All right, Matt. So I hope you guys understand debit spread. We're looking at roughly a profit of 2-1. It can be a little less, it could be a little more, but we want two strike prices that have give us that with a delta close to 70. If you can't get a 2-1, don't want to do a debit spread. Okay. Let me just see something here. Yes, that is an amazing stock. Okay. All right, guys. Tell us why you would not do a spread. Because it's not enough profit, not enough, not enough. I'm not getting the 2-1. If I'm paying $2 for a spread, and my upside is $2, and my premium is $2, and the spread is that much, I'm not going to make the money. But the other way, Anastasia, the other way, the other way. I really like the stock right now. It looks fantastic. Looks fantastic. All right. We're gonna do more of this next week. We're gonna do it several times till you guys get it right. Okay. We're gonna do several times. Okay. Watch the video. It explains it very, very well. Because John, I wanted to go into it. I want to have a delta. Look, John. Uh, why 90? What are you? Oh, you're talking about CBRE? Because John, the price is actually 94.70. The delta on a 92.50 or a 95 is not high enough here. The delta on a 95 or 92.50 is only 60 and 0.5. I mean, I'm not getting enough sensitivity. I want to get more sensitivity. That's why. Yeah. Cool, Ken. Cool. All right. Yeah, we're going to do plenty of repetition. Sounds good, Carlos. All right, Matt, why don't you go ahead and do seasonality? And folks, Matt's going to post the link. I'm going live. I'm going to give you 4 hot stocks in the pit. All right. I'll talk to you guys in a bit. I'll be live in 18 minutes. See you guys soon. Bye. Go ahead, Matt.
All right. Uh-oh. It closed on me. Okay. Where are we? There it is. Okay. Week ahead, seasonality. Get it every Friday. Here it is. Pretty bullish next week. Strength almost across the board. I'd say energy and real estate are maybe the weakest, but everything else is almost consistently topside. So I'm looking forward to that. Although I don't really care which way it goes, but it's always nice when it goes up. It's good for trading and good for my retirement account. So there it is. Strongest, probably communication and tech. It's not super surprising that they go together. All right. Hopefully you grabbed it. If you didn't, you can grab it from the YouTube stream. Let's go to seasonality for today. All right, you've got your sectors. Here they are. It's not crazy strong because there's a lot of in the middleness, I would say. A lot of 60s. Real estate accuracy is good. Profit factor is low. Strongest is probably utilities. Not a lot of profit factors there. So accuracy is there, but the trades aren't really making much money. But on the short side, we're also not seeing much at all, which means, again, we're mostly hovering in the middle. We would default to 10-day hold to really get our bias for next week. And that is also pretty weak, actually. I would say it's in the middle, but no, it's really leaning towards the short side slightly. So, except for communication, see that four trades, 100% win rate. Obviously, four trades is not a huge sample size, so we can't build a full. I wouldn't build a full seasonality position off of that, but it's what you can get because the ETF's not that old. So, only established in 2018. Let's go back to the long side and take a look. Let's grab the number. Number's 145. That's pretty weak. That does not look great for seasonality. Dollar General is up here. Dollar General's been very strong. So, and you're probably catching a little bit of a pullback. It seems to be basing out here. So, that might not be a bad play. It's trended pretty well from the low that it made. So I like that one. That's DG to the long side, Dollar General. Another one on here that I like is AbbVie. Only has 8 trades, but is 100% winner, and the stock is trending super well. Just can't get much better than that. Excuse me. All right. I do see a really strong one on here, McDonald's, but when you go to the daily chart, it just doesn't look as good. It looks like it's kind of consolidating. So I would pass on it personally. Yeah, AbbVie looks pretty good. Oh, you want an option? Personally, I'd go I would go a little closer, but not super close. So probably the March 28th, 185s. That's what I would take. Go out of the money and give myself a little bit more time. Thoughts on Dick's Sporting Goods, DKS? I mean, it's a great trend, although when are earnings? It looks like it's going to be coming up soon. Last earnings they had were in November, so it's got to be any day now. So I would definitely check on that first before I did anything. Yeah, we're on the long side right now. Yeah, this list is not very long, so we'll probably just leave it there. Let's go to the short side. The short side number is even smaller, so we are really just hanging out in the middle, just not going anywhere. As far as the plays, not CFD. CF, I wouldn't short. KMI also wouldn't short. Don't like international paper. I think UUP might have found support. Lamb Weston's not a bad one. It's LW right here. There's not a ton of trades for it, but looks like it is kind of at an inflection point. So it failed to hold the 100-day moving average yesterday, and it looks like it might be on its way down. So that is not a bad looking trade to me. Yeah, Peter, I'm doing seasonality. So if you've ever heard of the Stock Traders Almanac, this is our version of it. I think it's a little bit more in depth, but everyone's entitled to their own opinion. I think it's better. And we do it every day and it's updated every day. So uh, that's what it is. Next one is SPGI. Not loving that one. I'm just flicking through them on this side again. Going back over. Normally I'd have picks, but with the price action reversing, I was really wanting to wait and see how they were reacting. Uh, that's Roger's rule. That's not mine. They were asking me if we should ignore the delta. I don't trade like that. It's a great way to trade, but there's more than one way to skin a cat. I don't like how much capital you have to risk per trade to get that much in the money. So different styles. But that doesn't mean I take it out of the money. So here's the difference. If you trade like Roger, you'll get like 3 contracts in the money, let's say, for so if you're gonna allocate $1,000. If they're, $3 a contract, say 310, you're gonna allocate about $1,000 to 3 contracts. If I'm gonna take out of the money or at the money, I'm not gonna risk $1,000 on that trade. I'm only gonna risk more like 200. But if I'm right, I should get a similar return. So it's just different sides of the scale. I like to keep, yes, I'm looking for bigger moves and I'm risking less because the payout is much bigger. He's looking for smaller, consistent moves, which is why he needs safety because you have to risk so much capital to be able to get those in the money calls. So there's 2 different styles. You can, Janet, in the not per trader dashboard, the what is it called? Data miner software, which is this. It's in a graphical form. Yeah, it definitely is a little bit more aggressive. Ross Store might not be a bad short. Here's Ross Store right here. Tried to come back and got immediately rejected. And you know how strong the SPY was yesterday. So that was really relatively weak. It lost 2% yesterday, estimating a little more than that actually. And through it actually about 3%, lost $4 of 150. So with the market being up and that being down, I think the likelihood of it trying to make a run at the high is pretty low. I think it's probably going to go down to this 50-day moving average and do some price discovery there, see if it has buyers. And we're kind of towards the bottom of the list there. Let's jump on over to 10-day hold. Yeah, there's almost nothing here. Yeah, I don't like MSCI. I do like Etsy, which is a little bit odd. I usually don't like stocks that are up 6% in a day, but definitely looks like it's trying to reverse the trend here. And it's really strong. And it has good volume today, too. So that's probably not a bad one. Oh, this is a good point, too. I'll cover this really quickly and then I'll end there. One of the yeah, one of the other reasons that I don't like taking this kind of trade, or really when they're streaking up. So if it's had like 2 good days, Roger will buy into strength. I don't like to buy into strength because I'm buying out of the money calls. So let's say I'm going to buy an out of the money call to get it cheaper, and I'm going to buy like a 74 strike call. The problem is it's perfectly reasonable for this stock to retrace at least half or, three quarters of this range before moving higher again. Now, if you're in the money, that's not such a big deal. But if you're buying out of the money calls, the amount of drawdown you're going to get from this candle just coming back in towards the mean and then moving its way up, you're going to incur significant drawdown. So that's uh that's why I tend to not trade those. Other than that, that's all I got. Hope you all have a great weekend. Get your four free trades coming up here in a minute. There's the link. And I will see you all on Monday. Have a great day, folks. Oh, really quick. I said I would cover that 300% gain. Basically, what I've found, I'll just cover this briefly because I'm not all put together on my thoughts yet. On the SPY itself, on these zero DTEs, you can buy out of the money if you have a predicted move, and it really doesn't even need to get there. But unlike zero DTE options on equities, um, my I suspect that it's being used as a hedge a lot of times. So you it maintains liquidity and value in these really far out of the money strikes for a long time. Like this strike right here expiring today on an equity would already be zeroed out. It would have no bid. But these maintain value, so you can get in, and then as it starts to move, you're pretty safe if it's not moving, and then if it does move, it really starts to. I didn't share my screen. You're right. Yeah, right here. They actually took one right now, the 518. So just to retrace back up to the high. It really hasn't moved. And if it starts to come back up, this will start moving pretty immediately. These deltas move very fast. But that's it. I'll have my thoughts gathered more next week, but that's just something we're working on. All right. That was it. I hope you all have a great weekend, and I'll keep you updated. See you all next week.